This video is sponsored by Terrell Hutton, who makes the invisible investable. Today on the CEO Barbecue, we're looking for base and precious metals in Bolivia and Mexico, together with Santa Cruz Silver Mining. For a bullet point summary of this and all other CEO interviews, please go to resourcetalks.com and subscribe to our free weekly newsletter. The company you're about to hear from has not paid us for the production of this interview, but this interview is still intended only for experienced speculators because this is venture capital and mining is a very risky industry where failure is the norm. All conversations are general and impersonal in nature, and they contain forward-looking statements. I'm not a licensed financial advisor, and my business sells content-producing services, which also makes me biased. So before continuing on, please talk to an independent investment advisor with a good long-term track record, because your capital is at risk, and also visit setterplus.ca where you'll find the company's official filings. If you're not 100% sure you understand all the biases and the disclaimers that I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said herein. That all said, this company is best understood as a multi-operator or multi-metal multi-mine operator, because although there is silver in the name and obviously also in the revenue mix, zinc, lead, and even a little bit of copper make up the final numbers as well. There are quite a few assets in the company's portfolio, so I'm going to try to go through them as quickly and as efficiently as possible. But the main part of the business really is Bolivia, where Santa Cruz operates the Bolivar underground mine in a JV setting where they receive 45% of the profits. This is a crush grind flow sheet producing lead and zinc concentrates that have silver credits to them, which then gets put on trucks and then onto a rail, and then onward to Chile, together with some of the purchase feed, by the way. So Santa Cruz purchases feed as well. They source that through their ore feed unit, of which they do own 100%. The Porco mine is another underground polymetallic mine under a similar 45-55 economic structure, and it's located roughly 50 kilometers southwest of Potosi City, and it produces similar concentrates. So we're talking lead and zinc concentrates with silver credits to them. What they do own 100% of is the Caballo Blanco group of mines in Bolivia. It's centered on an underground polymetallic vein deposit, which together makes up a structurally controlled vein district, which essentially runs on a bit of a hub and spoke model, if you will, with multiple mines feeding one processing hub, which has an 1100 TPD plant and tailings capacity. There are also some exploration assets or some ground that Santa Cruz owns 100% of under the same, in the same country, so in Bolivia. And they're called the Soracaya group of projects, which the company believes is a silver-rich system with mineralization across reactivated faults and brecciated sulfides. And again, I'm only running through these because we'll get some more color on them later on in the conversation. Bolivia, as I mentioned earlier, though, is not everything. So they do operate in Mexico, and specifically Hidalgo State, where Santa Cruz owns 100% of the Zimapan mine, which really is an underground district. So it's got two mine areas, and they're connected by an underground tunnel. Mineralization there is what you might expect in Hidalgo. So we're talking high temperature CRD with the skarn. And so typically your silver, lead, and zinc and some copper mineralization is being mined through a mix, really. So there's a cut and fill, long hole, sub-level stoping, and then as well as room and pillar in some of the places. There's a processing facility here able to process 75,000 dry metric tons per month, as well as a milling facility able to work through 3,200 TPD, putting out three concentrates as well, that being lead and zinc, as I said, but also, interestingly, a copper concentrate comes out of this mine as well. Now, can they get permits for expansion, and is that in the plan at all, is hopefully something I can ask later on. All in all, together, when you count everything, these assets were good for 3.8 million ounces of silver equivalent in the fourth quarter of last year. We will talk about that equivalent. I am emphasizing on it multiple times, but how much of the value is generated by actual silver, and can they grow from here, are also going to be part of my questions later on. Now, for some of the numbers and some of the details, Santa Cruz is listed as SCZ on the TSXV, where the average 3-month volume is about 580,000 units. The 52-week high is $23.90, and the 52-week low is $2.00 and 52 cents. With 92 million shares outstanding and a $991 million market cap to be specific. Today, this is a $9.91 stock with a 50 and a 200-day moving average at respectively 15.61 and 9.75. Now, there's more that we can talk about in here in terms of financials and detailed numbers, but the complexity of a producer is such that if I went too far into it, my head might melt. I mean, it's almost that melting point here. So instead, I'll be asking about the share structure and the balance sheet later on in the conversation. But for this to actually become a conversation, though, I might have to shut up already. And Arturo, I'll give you the word here. But first of all, thank you for sitting down with me today.
Oh, it's my pleasure, Antonio. Thank you for having me here. It's a pleasure for me, and thank you for looking into our assets, into our company. So, and lovely to be here at the barbecue show.
Pleasure's all mine. I am looking forward to going over the basics here in a minute, but maybe just before we get into it all, you mentioned the barbecue. So here's the most fundamental barbecue question for you. How do you like your steak?
I like them well done, let's say.
Really? I don't get that too often, and sometimes I consider just closing my laptop when I get that answer. Where are you from originally? Maybe that explains it.
I am from Monterrey, Mexico, Antonio, and we do have good meat down there. The north of the country, the north of Mexico, does has good meat. Chihuahua,
Mhm.
uh, Monterrey, and those areas into the north, Hermosillo as well. So yeah.
It's just a personal choice that you decide to destroy the meat, even though you do have
Yes.
good meat. Fair enough. To each their own. Jokes aside, though, Arturo, we will do a deeper dive into some of the details here later on. But let's maybe set the stage here first and talk about. I just went over a lot of the details of what Santa Cruz is. But what are you building for? Like, are you looking for growth of production? Or are you kind of optimizing the company for a potential takeover?
No, that's a very good question, actually, Antonio. Well, we're growing the company because we we definitely love what we're doing. I personally love the company, definitely the industry that we are. The mining industry is a beautiful industry, and our idea is to keep growing the company. Um, we have a strong inside shareholders. So we think the company still it's in a very unique position right now to take it to the next level and grow it. So yeah, our idea is to keep growing, Antonio.
Mhm. I do want to know more about that, but people listening should also want to know more about Tara Hutton, who doesn't only make the invisible investable, but they've made this video free of YouTube ads by sponsoring it. Tara Hutton is built for the people who are tired of going through boring PowerPoint decks and geological jargon when they're analyzing mining companies. It's a digital platform where the data, the story, and the context sit together so mining investors can use visuals to understand the why without needing a geology degree or a week off work. And if you're on the company side, it's a great way to present your project like a serious operator with everything investors keep asking for in one place. Contact them at terrahutton.io. Not looking for an immediate takeover. And I suppose on the other end of the spectrum, there's M&A that you might be able to do in order to grow, or you might want to do that through exploration. But that's a topic we will get to, and we'll go into some of the details of what you're seeing here in a minute as well. But since this is your first time on the barbecue, we'll have to take a step back and go through what I call the smell test before we actually get to grilling the meat, which that smell test is really aimed at understanding who you are and understanding the incentives and the track record of management. Starting off with yourself, who are you, and have you made more money for shareholders than what you've spent during your career so far?
Thanks, Antonio. Well, I am a Mexican. I was born and raised in Monterrey, Mexico. I started the company back in 2010, actually.
Hmm.
And we came public in April 2012, and with a different portfolio of assets. But at the end, today, we have the portfolio of assets that we want to keep growing with. Strong assets, strong cash flow generators. So that's a little bit of I mean, of me, I mean, I am a CPA uh, by profession, but definitely a miner by heart, and I've been in the industry for the last 22 years.
Hmm.
I've been doing all kinds of jobs in the industry. I have taken courses of how to use the jack legs, how to use the scoop, how to work with front loaders, and many other equipments that are, of course, equipments used in our industry. No, so I love being outside. I love being with our people, and our idea is to keep growing the company as I was pointing at the beginning.
Hmm. So you started a company in 2010. So this is 15, 16, well, 16 years ago at this point. What did you do before that? Did you run other companies publicly before, or were you mostly working in the industry?
Well, back then, I mean, I was in the banking industry initially when I graduated from university, and from the banking industry, then I moved to a retail company in Mexico. We took the company public back then, into the Mexican stock exchange, and then I started my venture in the mining industry in 1999, and in 1920. That's when, sorry, in year 2000, it's when I built my first mine together with a team that I put together from Peñoles,
Hmm.
one of Mexico's largest mining companies. So we built that mine, and we were a very small group of people. The team was not more than 80 people, no?
Hmm.
And so we did a very good progress there. And in 2002, we sold that property to another company. And at that moment, I stay out of the industry, for 2 years more, where I went back to the banking industry, to the banking system. And in 2010, that's when I built Santa Cruz. Before then, I'm sorry, I started working with a junior Canadian company, Starcore International. They bought the San Martin mine from Goldcorp, and I was invited to be the country manager. I mean, responsible for all the operations of San Martin and all the operations in Mexico. So that's when I keep, or when I get back into the industry. And after 5 years working with Starcore and enjoying my job there, very nice team of group of people, Robert Eady, and many others that I learned a lot from, and at that time. But when the right time came, I decided to embark to start building a new company, and I have been always more inclining to the silver more than the gold. So I put together, with the help of a geologist that has been working with me for many years now, more than 15 years. So we put together three properties. We start doing exploration, and in April 2012 is when we came public. At the beginning, I was putting the money that these mines required to take them to the next level, to explore, to build their 43101 reports. And then I did a small private placement, still the company being private, a small private placement in Monterrey, where I live, which at that moment, with those monies, we aligned all the technical reports in the company to then file into the TSX, and became public through a three-corner amalgamation process, as it's named. No? So that's a little bit of the story and how Santa Cruz started. And since April 2012, this has been a public company. And of course, we have a very challenging years from 2012 until pretty much 2019, when we acquired the Peñoles mine. And from there on, we've been doing really good, and growing the company. We acquired all the Bolivian assets from Glencore in March 2022. That was a transformational transaction for the company. And since then, I mean, we've been very focused in the assets. We're very boots on the ground. I love being on the ground and close to the people, to our people. And assets, once we took over, it took us like 3 more months to take these mines into record production. And year 2003 was a year where all the Bolivian assets produce record amounts, record volumes. And in 2024, it's Simapan, the Mexican mine,
Mhm.
which we advanced rapidly back in those years and reached record production as well. And since then, I mean, we keep working closely and with our teams, both in Bolivia and Mexico, coordinating them all together, trying to leverage in the synergies and strengths of each other. And that's has been really helpful. I think one of the most important things that we have in the company, it's our people, no?
Mm.
From all levels, since the miners down in the ground and all the way to our CEO in Bolivia, our general manager in Mexico, our CFO, our accountants. I mean, wherever, whichever area you want to point out, I feel we have one of the best teams working around the company.
Mhm.
So I'm very happy with the team we have. I feel honored to team up with each and every one of them. And very happy as well with the assets that we have, no? They are assets that are strong from a cash flow point of view. They're strong cash flow producers. And they are assets that have a very extended life of mine, which we will discuss in a moment. But yeah, these are the assets we want to keep growing with.
Yeah. You bring up again interesting points, stuff that we're gonna touch upon. All the assets that you went through, the Glencore partnership that you still have in sorts. We're gonna talk about. Do you what else do you currently do right now? I mean, do you hold any other executive or board positions with other companies, or is this the only thing that you do?
No, you know, this company requires a lot of attention. So I, I I like to be more laser focused. So I'm not that kind of a person that can do many things at the same time. So I rather focus on what we on our company. So this is the only thing I do. This is my passion, my day-to-day focus. So I today I am the executive chairman and CEO of the company. So yeah, this is
Mhm.
pretty much my whole life, professionally speaking. No,
Yeah,
of course I have a beautiful and lovely family with 3 kids, 3 children, and a lovely wife. So after my family, definitely Santa Cruz is my passion here.
that's very well said, especially that last part. And I understand it's a full-time job, and that's what I tell my wife as well about my job when she wants me to do the dishes. I'm like, oh, I mean, my job requires a lot of attention. I mean, I talk to important people. So she gets it though. Moving on to incentives, Arturo, which I believe skin in the game is one of the largest incentives that management and insiders can have. With management and insiders are about 8% of the company. How much of that is you personally?
I personally own around today around close to 5 million shares, which is around 5% of the company, a little
Mm,
bit in that range, a little bit more. And also friends and family down in Mexico. I mean, I think that all combined, we can add another 20%.
mm. Yeah,
Also, if I include our board members, which have been really supportive, I think we are in the 23%, Antonio.
mm. What's the of your own almost 5 million shares? How did you get those? Is that just kind of founder shares for when you founded the company? Have you been buying in the open market? And maybe you can talk to me about the average cost. Again, we're at about $10 share price today, 9.90. So where is your average price relative to that?
That's a good question, Antonio. I've been buying in the markets, in the open markets, actually. If you see over the last 3 years, I've been buying significant amount of shares. I can tell you that maybe most of my shares come from today. They come from buying out in the markets. When we started the company, we unfortunately we went to very difficult times in the industry, very challenging times, no? So there was a big dilution in the share structure at that moment. I mean, not that moment, over the last 10 years. And I've been suffering that delusion as well. So in order to keep my percentage, I needed to keep buying shares, and I did that in the private placements and that we did in the previous years, and also in the open markets. I think in the open markets I've been buying more than 3 million shares over the last 3.5 years.
Hmm.
Yes, and I mean, I won't hesitate to keep doing it because I'm very buy-out of what we're doing and the health of the company and the team we have.
Hmm. Well, talking about insiders and insider ownership, do you or any of the other insiders personally own a royalty on any of the projects that you have?
No, Antonio, no, we don't own. Well, not that I know some of them. I mean, this is a company where I mean, maybe three of the other significant shareholders, they are own some other businesses, but streamings or royalties, no, I'm not aware that anyone owns any streamings or
Mhm.
royalties.
Um, Good. That's how you would want it to be, especially for a producing company. And I think this about does it for the smell test. And typically, when I'm done with that, I like better understanding the asset or assets in your case. And given that you're a producer, it might be worth setting the stage with maybe just production costs across the companies. How much does it cost for you? I know there's ASIC and everything, but those are kind of like accounting numbers, which I know as a CPA, and I'm an accountant by education. As a CPA, you'd appreciate that, but what I'm really looking for here is real life costs. So how much does it cost for you as a company to sell an ounce of silver again on an equivalent basis?
Right. Let me do a rough number, but today our all-in sustained cash cost, it's around $26. And let's say that it should be around $18 all in. I mean, after depreciation and amortizations, of course.
Mm-hmm.
Uh, but as you point out, I mean, just a basic kind of accounting plus and minus, which should be in the range of the 20s, $20, low 20s.
Mm-hmm. So does that include the ASIC that you're talking about? Does that include corporate and financing costs as such? Or well, actually, maybe better put, what's the break even silver equivalent price? Like if silver fell to let's say $30 or $40 tomorrow, and zinc and lead did the same thing proportionally, are you still going to be reporting positive free cash flow at those levels? And what's that minimum price for you to be free cash flowing essentially?
Right. Well, let's say if silver goes to $25, $24, and zinc goes to 2,500, 2,400, that's when we start getting some pressure, no?
Mm-hmm.
So that's where at that moment, I mean, we'll be very, very tight in our margins and pretty much well in a position where we'll be not building a strong treasury, no, at all. So
Yeah, that's exactly the number that I'm looking for. I know and understand where ASIC comes from. Not always a big fan of it because I know it can hide some of the real life expenses, and we'll get to a lot of the financing stuff and whatnot later on as well. What is when we talk about costs though, Arturo? What's the biggest driver for you? Is it labor, energy, reagents? I don't know, something else.
well, labor, Antonio, labor is the most, let's say, the most expensive cost we have. After labor, we have, of course, consumables and energy. Those two are very, let's say, the second line of cost. And then, of course, it goes down to financing. It goes down to, mm, uh, yeah, I mean, to other. corporate expenses, if you
Yeah.
allow me to put it that way. But I will say that payroll and energy and are the most and consumables, right?
Hmm.
That may be the three most expensive or biggest items that we have.
Yeah. If we look at the non-production expenses, so corporate, what was that looking like last year? Again, because you did what 3.8 million ounces, I said of equivalent. What were
That
the
is Q4. I mean, for the full year, we did around 14.4 million
yeah.
ounces silver equivalent, where we produce around 5.6 million ounces of pure silver, and the
Yeah, so
rest.
so what is the yeah, and so what were the either on Q4 basis or on annual cost? What were the non-production expenses that were on the other end of that?
Well, you have, of course, financial expenses. You you have as well some corporate expenses like, I mean, bonuses and
Yeah,
payments uh, paid with equity by the company to its management and its board of directors. Um,
I'm just basically trying to calculate on a per ounce of silver equivalent how much how much cost does G&A add? Like, are we talking about a dollar an ounce, $2 an ounce? What does that look like? That's really where I'm going with this.
okay. Sorry, I didn't didn't get got the idea. Well, GNA, it adds around, rough numbers, Antonio, around 20-25%.
25% of your all-in sustaining cost, or
No, of your all-in sustain. No, it's lower than that, Antonio. I'm sorry. You cut me out of the office. Oh, sorry. It should be around 18%. Let me take a look quickly just to make
sure.
sure. Uh, Sorry. This is just to give you an idea. Q4, Antonio, we have around 20 for the full quarter, around 6.8 million, which is around 11%, let's say from 9 to 10. Yes, that's the number I have. It's around 10%, Antonio, round numbers.
Mhm. Yeah. So it's
Yeah,
10% of that all-in sustaining cost that you're telling me about.
correct.
Okay. Are the costs that you have, like realistically on the ground, are they mostly in USD in dollars, or are they mostly
Yeah.
in the local currencies?
They are in US dollars.
So like but like labor, because you said that's the biggest part when you pay that in the local currencies in Bolivia or Mexico.
Oh, yes. No, sorry for that. Around, yes, we have around 75 to 80% are uh, our local currency. Um, US dollar, I'm sorry, Bolivian bolivares
Hmm.
or Mexican pesos. Close to 80% are bolivares or Mexican pesos. Same ratio in Mexico and in Bolivia.
Right. Yeah. Um, is that do you hedge against currency risk or anything like that? Because that's really where I'm going with this, or really what I'm thinking about here is how do you deal with currency risk in your situation?
Well, we hedge on the Mexican peso sometimes. We enter into these short-term hedge programs, not regularly, but every now and then, as the Mexican peso has been getting stronger over the last 2 years, especially. And in Bolivia, we have no hedge. The Bolivian currency does not have the trading volumes as the Mexican peso has, no? So in
Mhm.
the Mexican, we do hedge every now and then, but not in the Bolivian.
Mhm. Talking about hedges, Arturo, is your production hedged as well, or how much of the total production would be under, let's say, an offtake agreement already across the portfolio versus what's exposed to spot prices?
We never hedge our metal contents, Antonio. Uh,
Hmm.
but the only things we hedge is the Mexican peso. And let me correct myself, but we do hedge just a small portion of our sales that have to do with San Lucas. San Lucas is the ore sourcing company which buys and sells uh, concentrates. We buy ore from small miners. We process the ore into our milling facilities, and then we sell the concentrate. No, so it takes us 1 month for us to collect the monies uh, since the day we buy the ore until the day that we process, ship the concentrate out, and collect the monies. No, so we only hedge for 1 month the metal content of San Lucas. And the reason for that is because we pay to the small miners literally the following day after we buy the ore, no? So we don't want to run any chances of metals volatility over the following 4 weeks, no? So that's the only case where we do some hedge in the metal.
Yeah. So at the current market prices, why wouldn't you hedge all the production instead of being exposed mostly to spot prices?
Right. Well, it's hard to do that. I mean, our main objective is to preserve our assets strong, and this is an industry that, for example, the Bolivar mine, we experienced a flooding early in 2025
Hmm.
that brought our production down significantly at Bolivar. Let's say that we were hedged on the silver that Bolivar was producing over last year, 2025. We will be required to buy silver outside and cover those hedges if we, in the case we cover our full production, no? So we're very cautious, very, let's say, conservative into our approach or discipline into our approach of hedging. I understand that it's very tempting, especially when you see silver prices in the 80s or $90, no? But we want to be very cautious, and that's an approach that we feel that we should not take. Maybe what we can do at some points is hedge not more than 25% of our production, but no more than that.
Mm.
Eventually, no, I'm not saying that we're doing it or that we have done it, but in our minds have gone and we have done an exercise where we feel comfortable that eventually that might be something that we might do, but nothing more than 25% of our production for XY year.
Yeah. Yeah, and that's an interesting topic, I suppose, in and of itself. You are reminding me, though, that you do have a contract or an agreement with Glencore, which was recently amended. Maybe you can walk me through what it looks like right now, because the base purchase price, I believe you bought off, essentially making sure it's no longer there, but the CVR mechanism is still there. So what does that look like? What triggers payments? What's the cap? Yeah, what really happens there?
Absolutely. And first of all, Antonio, as we were talking, I just did some check, got into my system here, and our SG&A on an all-in sustained cash cost is around 8%. No?
Mhm.
So sorry for that.
Yeah, no problem.
So the CVRs are very important, very let's say very interesting tool that we use to finance the purchase of the Glencore assets. No, these CVRs are as they are. I mean, they are conditional value rights. So we are required to pay Glencore $1.3 million a month if and only if zinc prices go north of $3,850 per ton, right? So at that moment, the CVRs kick in, and we should pay 1.3 million. 1.3 million, it's the cap, so it's $16 million a year. And at that moment, let's say that zinc comes down again from 3,850, you stop paying, right? It's a trigger that it's only triggered when the metal prices are at those levels. I mean, when zinc is at that level, no? So For us, we would love to pay that because we will be making a lot of money from the zinc as well, no, at that moment. Just as a reference, for every $1 million that we pay Glencore on the CVRs, meaning that zinc is at 3,850 or beyond, we're making around $10 million net for us, no? So that's how much the revenues will increase from zinc
Yeah.
in that.
But isn't that a bit like a tax on upside though? Like again, if zinc spikes here, say it doubles over the next 12 months, how much of your upside or how much of the upside for your shareholders is kind of lost to the CVR, that 1.3 million bucks that you're talking about?
Well, technically, it's not capping any or not much, no, because I mean you're sharing a profit on the zinc if and only if goes at those levels. But you keep, let's say it goes north of 3,850, it goes to 4,000. The payments are capped at $1.3 million every month, no? So if it goes to 10,000, yeah, you keep paying $1.3 million a month, but you
Mm,
still have an upside as well, no? So the silver does not come into play into these CVR payments. So it's only for the zinc.
yeah. Is there room to renegotiate that or room for an early settlement of sorts or something else like that?
I no, Antonio, let me tell you why. The original terms, the original share purchase agreement was or contemplate four items, right? The first item was $110 million to be paid $22.5 million every year beginning March 2022 when
Hmm.
we acquire the assets, no? And then all when we closed the transaction, there was a $9 million inventory left in our patios. That once we ship those concentrates out of our patios and we collect those monies, we should pay Glencore those $9 million. Also, all the value-added tax that was incurred by Glencore when they were running these mines should be returned to Glencore because it was money that they were entitled to receive as the Bolivian government owes them those value-added taxes at that
Hmm.
time, no? And
Yeah.
finally, all the assets have a 1.5 NSR, no? So those four were the four items that contemplate the share purchase agreement. So with the $77 million on the CVRs, right? You are buying the three items. You're buying the NSR, you're buying the $9 million of revenues that were left in the patios of net revenues in the patios, and you're buying all the value-added tax, right?
Hmm.
So you're keeping those three concepts now. The cash consideration payment was already done and was paid in full in September 2025. So if you add what those three concepts were valued at when we closed this restructuring process in October 2024, it's the $77 million that we're paying for on the conditional value rights.
Right.
So it's money that we should pay to Glencore because we kept and we kept those three concepts, no?
Hmm. Are there any other type of liabilities in a similar fashion to the CVR though that you're working through right now?
We have well that we have in right now in our balance sheet we have a revolving promissory note in Bolivia and three bank um, revolving facilities as well, which we use them for treasury efficiencies only, no? But other than that, the company has no debt. We just amortize in January the Trafigura loan
Hmm.
in full. We used to have a loan with Trafigura as we got around $18 million from them in 2021 to buy the Simapan mine. So we amortize that loan in full now in January. So no, we have no other debt other than the
Yeah.
revolving credit facilities.
What does the balance sheet look like right now? I mean, just total cash and everything that's on there. Yeah, again, as you said, cash versus debt.
Right. Well, the cash on hand, we closed the year with around $80 million, no, on hand. So uh, cash, it's building on a literally on a quarterly basis. Our liabilities, short-term liabilities, have been reduced as well. Just a ratio over, let's say, our ratio of short-term assets with short-term liabilities, I can tell you right now, but it's around uh, it's around 1.5 times current assets over liability. No, so we have a very, let's say, strong balance sheet and building. No, uh,
Mm.
we we have no other debt. We have no royalties, no streamings.
How much of the cash that you have is actually usable today, though, like versus, let's say, restricted or pledged or just needed for any kind of collateral, letters of credit,
Right.
jurisdiction encumbrances of sorts, or anything else that is like that?
Well, we have no restricted cash, no, because there's no we have no covenants on the revolving facilities we have, and no covenants, especially into the our treasury. We have no covenants, so no pledges on those facilities. So technically, our cash on hand is for us to use as we required, no, to keep
Mm-hmm.
building the company and to keep investing into our assets.
Yeah. Yeah, fair. I'm trying to understand essentially the outflows expected over the short run here. So maybe this is also where you can talk to me about sustaining annual capex across the company as a whole, maybe.
Sure. Our sustaining capex for this year, for example, for 2026 is around 37 million dollars across all of our assets.
Hmm.
Mhm.
Yeah. And so
So
are you going to be, so say we took all the outflows, the ones we talked about and the ones I might be missing, can you pay for all of that for all the outflows, for all that out of pocket, as well as, for example, cleaning up at the Bolivar, which I want to touch upon as well, but all kind of capex projects and debt and everything, will you be able to carry all of them, or do you expect having to go back to the market for either debt or equity?
no, well, we closed the year with around $80 million in our treasury, no? And today our assets are building very strong cash. Our budget for this year, let's say silver remaining around $70 and zinc at 3,200. Our EBITDA for the year should be around $240 million. Let's take out the capex, the sustained capex. Take out $35 million. So you should end up the year with around $200 million.
Okay. No need for extra debt, no need to raise equity or anything like that. That's not you, unless I suppose, and we'll touch upon that. But unless you're doing M&A, you're not planning on raising any capital.
That is correct, Antonio. We're
Okay.
not planning to raise any capital. Yes.
Let's
And
maybe
and
do
dilution
talk about the
cost is very.
assets. Oh, go ahead, please.
No, no, no. I was just about to say that. Having dilution or entering into any kind of dilutive transactions for us is very sensitive, very important. No, as I was telling you at the beginning of the barbecue. Friends and family, we own a significant amount of shares. So yeah, we're very cautious on dilution, and also we want our investors to keep getting a solid investment within Santa Cruz.
Hmm. Well, let's do talk about the assets that you say you want to keep protecting. Maybe we can talk about them one by one, starting off with Bolivar. And I think we couldn't talk Bolivar without talking about exactly what happened in May of 2025, where you reported a flooding event. So yeah, talk to me about what exactly happened here. Where did the water come from? what changed underground, and of course, what's the fix? What are you going to do long term to make sure it doesn't happen again?
That's a good question, Antonio. Well, at that moment, we arrived to level 430 at the Bolivar mine, and this main ramp was through uh, Pomabamba and Nane veins. These are the two highest silver grade veins in Bolivar from the five veins that we run at that mine. No, at that moment, level 430 and the main ramp, getting into those areas, we intersect an aquifer that was running nearby the area. All this underground, of course, no. So when we blast that phase or that working phase, uh, we immediately start seeing water coming in, and we experience four times the water amounts that we were dewatering or pumping out at the moment. No, so we left things. I mean, settle. We first of all we took off all of our miners and equipment out. Safety of our miners is first than anything else, and we start. Let's say going back to maps and blueprints and to see where we think that the flooding or the reason of the flooding. No, originally we thought it was an aquifer that we intersect, but it was a bucket of water, as it's called in Bolivia. And the
Mhm.
bucket of water is an area with excess water from an aquifer, of course. That was when we intersect that. I mean, it's when we experience these significant amounts of water. No. So immediately, what we did, we start building a pumping station in addition to the ones we already had. We knew that we were facing more water as we keep coming deeper into the system. So the piping system for these new pumping stations was already in place. We had in 2024 two piping systems in addition to three that already existed or exist. So we build this new pumping station. We start the watering, and we send a team out of Mexico, hydrogeological team who works with Peñoles closely in very water mines that they have. This team came in and helped us doing some studies and redesigned the ramp and the areas that we were working. And as we speak, I mean, the watering process has been going very in line and in budget as we expected. We have already accessed Pomabamba and Ane at the highest levels, but the dewatering process is coming along really well. I mean, it's actually we can dewater faster because of all the pumping system that we have added and the piping. Um, the only bottleneck that we have here, so that we haven't been able to do water faster, is that we are giving the water to the nearby communities, no? And this water we need to treat the water. It has a very high pH. So we need to treat the water before releasing it to the communities. And
Mhm.
that's why we have the bottleneck. Treating the water takes time, and it's a process that we need to, I mean, to give its timing, and so that's what really brought this into a slower recovery process than what we would
Mhm.
like to. But by Q4 this year, we should start with those areas back on track.
Mhm.
As we speak, I mean, you will see Q1 production increasing silver again at Bolivar from Q4. Q4 production from Bolivar was 34% increase because we already started accessing those areas. So Q1, you will see another increase, and it will keep continuously increasing until we reach its full capacity again by the end of Q3, beginnings of Q4.
Going back here for a second, maybe on why this happened in the first place. Who or what is to blame though? Like, what exactly what failed, what portion of the company kind of failed in order to make that happen? And really where I'm going with this, or why I'm asking Arturo, is because I'm wondering, uh, could it happen again? Could it happen at another place, at one of the other operations or something like that?
Yeah. Well, I will say, I mean, there was never in the history of these mines a hydrological geology study properly done. So we were working, this mine has historically been experiencing, uh, I mean, significant amount of water. So it was nothing new. Just we didn't have at the time the proper studies from a hydrogeological um, report. We have, with the team that I was pointing out that came from Mexico, we have done many studies now. We have also done some drilling to identify where these or how these aquifers behave, or these where we can find or encounter another pockets of water. And we think we have a very clear indication. In addition to that, our dewatering system is 5 times uh, larger than it was last year. So we're prepared for more water, but we do not expect something like this to happen again. I think the new studies we have on hand from a hydrogeological team are very helpful and a very good instrument to make sure that this won't happen again.
Mm-hmm. So, which areas, going back to again what's happening today, which areas of the mine are now constrained still?
It's the lower levels, from level 300 to level 430 at Bolivar mine. Of course, we're talking Bolivar mine, but at Pomabamba and Nane veins. Those are the two veins that were experiencing excess water.
So, if we look at kind of all the planned stopes at Bolivar, what percentage would you say is inaccessible today?
Well, from the stopes that we had prepared, I can tell you that it's from those two areas, no, Pomabamba and Nane. I will tell you that we have around 20% already dewatered and already in production. So you will see Q1 again an increase in silver production, right?
Mm-hmm. Yeah. Yeah, good. How much time do you think it will take you to make them accessible again, though?
Well, we have our budget is to be by Q4, no later than by Q4, let's say mid Q4 at the latest, which would be fully operational on those levels, level 430. And at that time, definitely all the stopes and the areas that were prepared will be in production. That's why our budget calls for a continuous increase in the production of Bolivar mine for the rest of the year,
Mhm.
quarter over quarter. And I'm sure you will see that in Q1 again, when from Q4, where you see a 34% increase in the silver being produced by Bolivar. So yeah, by the end of this year, we should be before the end of the year, by the mid Q4, we should be fully uh, back on track in Bolivia.
How much is that going to cost getting that fixed?
It was more the cost of opportunity than the cost of the additional capex. No, the capex for the whole pumping stations, pipes, and studies, it's around $2.5 million. So, I mean, it's not, let's say, very exponentially high
Yeah.
from its current budget. No?
Yeah. Yeah, sure. And I assume you'll be publishing kind of continued updates, or is the schedule kind of set and you just update the market when it's fixed, or yeah, how do you look at that?
Absolutely, we will update the market. I mean, continuously. We'll take the opportunity that next news release coming should be our financial statements, Q4. And I'll take the opportunity to report to the investment community how the watering process is going.
Mhm.
Definitely.
Does the remediation plan that you're working through right now, does that include any new consultations with the community, or what really is the community situation here?
Well, the community situation is very positive. We have a very good relationship since many, many years now. Uh, so no, there's no consultation to the water, the mine, or yeah, that process it's ongoing without the need of any consultations.
Hmm. What's kind of that relationship there though, or what are the questions or maybe demands that you're getting? What are they asking, or what are they asking for?
Who? The community?
Yeah, the community when you because I assume you did have to go and talk to them before you started working on the remediation plan, or yeah,
No, no, no. This is happening inside our minds, Antonio. I mean, the
yeah,
communities, they have not experienced any problems at all. And contrary to that, they have more water for whatever they need as
huh.
we're providing them the water. We're treating the water before releasing it and providing it to the community. So, no, no, there's no complaints related to this matter with by the communities.
Hmm. You do work with the local communities, though. I suppose, like you hire people from the mines and whatnot. I would assume, right?
We absolutely, our first priority is to hire the local people, definitely.
Hmm.
And that's
Well,
a policy that I mean, we practice that policy around all of our assets.
yeah, yeah. Um, uh, Onto the operational reality now, and kind of looking forward as well. What is the asset really? Is what I'm thinking here. So how much life of mine is left at Bolivar, for example?
Well, Bolivar, that's an interesting question. Just to give you an idea, Antonio, these mines have been running Bolivar particularly for more than 200 years continuously, right? Of course, at a different level, different stage, different kind of operation, no? But Bolivar has, if you take into consideration the resources, which are 4.2 million tons, and you take into consideration 1.2 million tons on reserves, you have around 12 years of mine life, no? And the success rate, why we like to consider it that way, the success rate for to convert resources into reserves is more than one times. It's around 1.2, 1.4 times historically. So we make sure that our exploration department is always ahead of the mining department, or what they are depleting. We need to replace that and maintain or increase.
Hmm.
But yeah, we feel these mines are going to be running for generations to come. That's why at the beginning of our conversation, I was pointing out that these are the assets that we want to keep growing with.
I do want to talk about how you plan on growing them essentially. How is Bolivar relative to other assets? Like, how would you rank the assets that you have right now in terms of LOM? Yeah, in terms of what's left of in terms of yeah life of mine that's left.
Well, across all of our assets, we feel, and if you see our technical reports, which I kindly encourage you to do so, you will see that even the author of the report suggests or clearly said in some cases that the upside for these mines is still open along strike and a deep, no? We do see and we believe that these assets, these mines, including the Mexican mine, are open and a long strike and a deep as we have test with drilling campaigns, and we're very positive that they will be running for generations to come. No, we will keep showing an update resource estimate. Very soon we will announce an update on the resource estimate, and you will see that these mines are technically replenishing what they have mined over the last few years when we put the first report. So technically, we're literally in the same level, if not a little bit higher, no?
Hmm. And the way you plan to grow that LOM across the assets, as far as I understand it, is largely through exploration. So maybe we can talk about that exploration or those efforts. Is most of the exploration money that you're going to be spending right now focused on replacing those ounces kind of from near mine exploration, or is there a chunk of greenfields exploration as well?
Well, we have a lot of most of let me get back. We have some greenfield at across our I mean through all of our mines, uh, always at areas distant from where we're mining today. But our let's say our infill drilling campaigns, our drilling campaigns from surface as well, they all aim to different. I mean, for the immediate mining, for the 2 years mining, 5 years mining. I mean, there's a different approach into our exploration activities. What I can tell you is that some of the mines we have, for example, Porco is a narrowest vein system. You have veins that go, the widest here goes to 1.5 meters. And mostly in average, you're mining around half a meter. So inventorying resources in a mine with that narrow vein system, it's very expensive to do it with diamond drilling campaigns. No? So sometimes it's better just to go and develop and build your inventories as you are developing the mine.
Mm-hmm.
And why is that? Because drilling to intersect a half a meter vein will not give you much. But when you have the vein so clearly in front of you and so clearly visible, so you just keep going with your developments on those veins. And in that particular case, we always drill. We have maybe in Porco, we have 3 weeks continuously running. But some of our development is what gives us the resources from time to time, no? Because again, the veins are so narrow.
Mm-hmm. And that is
But in the wider, sorry,
no, please go ahead.
in, in the wider systems like Bolivar or Caballo Blanco, or not to say Simapan in Mexico, I mean, you have true widths in Mexico, for example, that they go up to 60 meters, the last drilling campaigns, 40 meters, 20 meters. So inventorying resources in those type of mines, it's more productive to do it with diamond drilling and very efficient. No, so that's what we do in these systems with wider mineralization areas.
Well, so you're opening an interesting topic here, Toro, because that's something I was wondering as well. As a producer, how do you decide how much to spend on development versus how much to spend on looking for your future ounces that you might need to discover now, but then mine them in 10 or so years, or maybe even M&A? How do you make that decision? Yeah.
Right. Well, there's a balance between economics and mining, and there's I mean, let's say there are two drivers here. Sometimes the being a public company drives you to do more exploration and more be more aggressive with your drilling campaigns, but the economics of the property limit you to sometimes to do that, no? So you should be cautious, and in our case, we're operators. I mean, we run our mines, and that's what we do. So we need to find the balance between investment and increasing our resources, or the opposite, no? Or or we increase our resources. Sorry, we increase our resources, but we need to have a balance in the capex that we're dedicating to that, no? Uh, so definitely these times when you see metal prices, even with today's silver coming down as strongly as it did just today or over the last month, even at these times, I mean, you're building a lot of catch, and these are moments for us to build as well our resources to do more exploration, to be more aggressive in the diamond drilling campaigns, and to increase our inventory reserves at those mines that deserve the drilling campaigns more than others, no?
Hmm. And but all of this is about, essentially it's about how do you replace mined out ounces, or how do you actually grow, not only replace them. So how do you get to the stage you were talking about it at the beginning? Where do you see growth coming from? Is it that exploration? Is it, are you going to be aggressive on the M&A front? Yeah, talk to me about where you see not only replacement but growth coming from as well.
You will see this year, 2026, I mean, this should be a very good year for us, no? You will see growth coming from different areas, no? From efficiencies, you will see growth coming from Bolivar mine, and 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 you'll see growth coming from Simapan mine. At Bolivar mine, that the watering system is what will give you growth, plus two additional areas that we have identified with high-grade systems that will come into production by the end of the year, simultaneously to level 430 at Pomabé, Navama, and Pomabé, and Nané, and Pomabamba, I'm sorry. So from from Mexico, you will see growth coming from efficiencies as well, because at level 960, which we arrived last year at level 960, and we have been doing a lot of investments there. We bought more than 15 underground equipments. We build we brought all services down to level 960, um, compressed air, water, energy. So that level is already adding into our production. So what we expect is slightly higher silver grade contents, let's say high 80s from low 80s that we have today. Higher zinc contents, 3%, 3.2 from 2.4 that we're mining today. And better recoveries as well. We have finished adding a flat cell circuit in Bolivar, in Simapan, to recover the silver immediately after it gets into the milling facility. This is going to help us to increase our silver recoveries from 77% to mid 80s, no? So that slightly higher head grades, slightly more tonnage throughput to the mill on a monthly basis. We started the year with 74,000 tons being processed at Simapan on a monthly basis. By the end of September, we should be at 80,000 tons. So those three things, slightly higher silver grades, better recoveries, and more tonnage throughput, will take Simapan to a growth of around 10% this year. So those are efficiencies, no? So the two mines that will show the higher efficiencies this year will be Bolivar and Simapan. From an organic point of view, we have the Soracaya property. The Soracaya property is a brownfield property that was explored and partially developed by Glencore. So we have the main ramp already at two of the highest veins already there. We have stopes ready for production. We have been mining those stopes for metallurgical studies, and we're getting that mine fully permitted. We expect all permits on hand by July this year. And at that moment, we are going to start mining small quantities, if you allow me, 200 tons per day, 300 tons per day by Q4. But those small tonnages are going to help us to keep building Soracaya in a very cost-efficient way. We're going to use a nearby milling facility, or maybe even our own milling facilities that we have room to 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 Soracaya.
Mhm.
So that'll be an organic growth. Let's say not too much this year from Soracaya, but by 2027, by the end of 2027, that mine should be at full production, which is 900 tons per day. At that moment, you will be adding around 3.4 million ounces of silver equivalent to your production, where around 3 million ounces are pure silver. That's a very silver-oriented mine. So organic growth will come from that mine, no?
Hmm.
So you have growth from efficiencies, growth organic from an organic point of view, and definitely we have our eyes open for M&A. We're building a strong treasury. We think there are opportunities out there which we are reviewing, and our objective is to find something in the Americas, in the, of course, jurisdictions with strong democratic systems, and not to mention any country that we will not be coming in and invest, but we have our eyes open, Antonio. So yes, growth will come from efficiencies, from organic, and hopefully next year with the addition of something that we we might acquire.
When it comes down to potentially acquiring new assets, Arturo, would you want to stay focused on kind of the Spanish speaking part of the Americas because you have experience operating mostly in Bolivia, but also a little bit of Mexico? You said you're Mexican native yourself. Is that what you want to keep focusing on, or would you see yourself entering into the US or potentially even Canada?
We're reviewing, Antonio, properties or projects from in Canada, in the US, and in the Americas. Uh, So we're open to see everything in the Americas. We feel comfortable running underground mines. I mean, we talk about multi-jurisdiction, multi-metal company, but it's also a multidisciplinary company in the sense of an underground mining approach, no? Each mine, the Bolivar mine, has a very different mining approach than Porco, for example. And those two mines have a very different approach of mining than Simapan, right? So we are comfortable in all those kinds of mining with competent rock, with not that competent rock, with vein systems, with skarns, with so yeah, I mean, in jurisdiction wise, as I point out, anywhere in the Americas, Antonio, we feel comfortable.
Mhm. What do you think of the biggest risks to the company right now, though, Arturo? We talked about operations and growing and everything. Let's touch upon exploration in your own kind of early stage exploration assets. We might talk about that as well a little bit. But just from everything we've spoken about today so far, what do you think are the biggest risks?
That's a very good question, Antonio. Well, I will say that for us, delivering under promise and over delivering is definitely what we want to do and what we are always uh, trying to achieve. And so I will say that execution for us, Antonio, execution, we don't see any threats outside of our assets today. We have a very good relationship with the communities. We have very good relationship with the authorities. Uh, Definitely, we have been doing everything so that a water situation like the one in Bolivar will not happen again. So I think execution for us is not a well, it's what we it's not a threat. Sorry, because I'm not responding to your answer properly. But we don't see a threat outside of our assets. Well, we know the challenges that our countries have. I mean, Mexico and Bolivia. But we've been working with those challenges, if you want to put it that way, ever. I mean, from in Bolivia, we have now a central right government, Mr. Rodrigo Paz, very pro mining gentleman, very smart guy, and he has also stated that the mining industry will be the flagship industry in the country. No, he really wants to make a change in the legal framework to make sure that the country has what it needs to give comfort to the foreign investment. So I will say that our environment outside the company is very positive today, both in Bolivia and in Mexico. So yeah, just our main focus is to execute properly, to to be efficient and to keep building these mines.
Mhm. Well, talk to me a little bit more about political risk in Bolivia. I mean, things seem to be stabilizing, but still not, maybe not entirely stable. What is your general read on exactly what's happening there right now?
Well, that's a good question, Antonio. As I was pointing out, I mean, Mr. Rodrigo Paz, it's right now the president of Bolivia, and he's right now very focused on bringing the Bolivian economy, I mean, to build it or to have it a stronger economy, no? He has been, as I was pointing out, has been saying that the Bolivian, I mean, the mining industry is the industry that should be the flagship industry in the country. And the main reason for that is because you are a natural exporter. I mean, you produce your concentrate, your metals, or and you export those, so you bring US dollars into the country, right? So that's very important. Right now, the country has been, over the last year or 2 years, has been running with very low reserves, US dollar reserves in their treasury. And, uh, and that has been, I think that's a priority to keep building a super avid um, and to cover those deficits. I, I think right now the environment in Bolivia for the private initiative is very positive, and
Yeah.
for the mining industry, definitely it's we're seeing the work that the ministers guided by the president, Mr. Rodrigo Paz, the work that they have been and they're focused into building an appropriate legal framework is is something that they are actually doing. No, they it's not that a promising campaign, but they are actually working towards delivering some changes that will bring more certainty to the foreign investment. I think it's a good time for us to for everyone as a miner to start looking into Bolivia. Bolivia represents, in my opinion, one of the most exciting countries for mining today. It has been unexplored over the last 20 years. So there are a lot of very promising areas, and I mean it's a very strong country, very from a
How,
geological point of view, no? So
how is it from permitting perspective? I mean, do you think what kind of permits do you think you might have to apply for to grow to the point that you mentioned earlier?
right. Well, one very important permit which we already have on hand is the social permit in Soracaya, for example. We have that permit on hand, and increasing um, the production permits or graduating the company to, Soracaya into a production asset or I mean mine will be technically mechanics, no, delivering what the reports and the information that the authorities required. But I don't see any reason why we will not get those permits during the summer of this year, no? So
Mhm.
I guess the most important, as I was pointing out, is the social permit, and we have that already, no?
Yeah. Are you dealing with indigenous communities anywhere across the new land packages or the ones that you're operating right now?
Yes, absolutely. Actually, in the ones we're operating right now and in Soracaya as well. And when you treat people with respect, Antonio, and you really are coming here, our philosophy is I mean, you cannot come to these communities and make these multi-million-dollar investments and not see a benefit but, from the communities into these kind of investments. I mean, you cannot do that. We always build schools. We bring education and many other initiatives that improve the well-being of the community. So it's the only way that you can do a responsible mining nowadays, no?
Hmm.
But we have a good relationship with all our communities, and we work to keep and we'll keep working to keep them that way.
Well, is illegal mining still an issue in any of your claims? I believe that's what well, for example, the deaths at Tres Amigos were related to illegal mining, maybe, or has that been an issue since? Has it been
Yes,
solved? What does that look like right now?
unfortunately, yeah, there's illegal mining in the country in Bolivia, and yeah, but we there's nothing new. I mean, this just as a reference, these companies had been running for the last 60 years, and I mean, the illegal miners had been there since ever, no? So it's important to be cautious how you work, also on where and how to manage or handle your exploration programs. So definitely, we have experienced illegal miners in our mines, and but we're very cautious in those kind of situations. No, I mean safety again, safety of our miners is first than anything, and yeah, we have a very strict policy in that regards. I mean, if we have illegals in certain areas, we just don't confront them and get our people safe and call the authorities right away, and they do their part.
Hmm. Well, it's an incredibly unfortunate event when someone loses their life anywhere, and definitely at the workplace. And that risk, I understand, is never zero in mining. But talk to me more about what controls are now in place for you. What fixes have been implemented, if you will, to make sure that doesn't happen again for you at the workplace? Because again, that's something you dealt with that again was not easy.
No. Well, unfortunately, Antonio, those things happen as you point out, and I mean, there are two sides that we work very closely um in safety. One is the hard side or hard part of the formula, which is all your infrastructure, your formulas on how you do the developments, your mines, how do you reinforce your mines, all these hard, let's say, items that provides and give safety to our miners. And we have also the soft side, no, which are training courses, of course, awareness and reminders to our miners. We dedicate more than 40 minutes every day to each and all of our crews before they come into the working areas. We have a reminder event of safety where it's very interactive with our miners. So before they engage or before they go to their working areas, they have already uh, had almost an hour of exchange of continuous reminders or always any new ideas or safety um, things that we can provide. We we do. Just we have an exercise at site and even at our offices where we have these cards. We have built some cards like 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 I mean where someone get a card and we have a sand clock in our tables now. in our meeting rooms and across all the company. So before we start a meeting, we always turn the clock down, and you have like 3 minutes where we talk only about safety. And someone gets a card, and that card will give you a safety reminder and an example of what not to do. No,
Hmm.
so anyone reads the card, we talk and exchange ideas about safety, and then we begin the meeting, even though it has nothing to do with the day-to-day mining. This exercise goes at the corporate level, even. I mean, also, and of course, it goes across all of our offices. No, so we try to do the most as possible and beyond in terms of safety. But unfortunately, accidents happen, and most of them have happened with when there are breach of protocols or 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 just a very light decision of taking a chance. In
Hmm.
one case, it was a miner, for example, who forgot some working tools and the day before, and when they finished working, those areas were closed, properly marked. They were advised, everyone was advised that that area was closed in the morning before they get into a working area, into a different working area. They were all reminded that it was closed and the reason why it was closed. Unfortunately, one of our miners decided to go, this was years ago, decided to go back for his tools. He says it's going to take me 5 minutes. I'll go on my own. I mean, first breach of conduct. I mean, you can never be alone in the mine, never, ever. So those 5 minutes, he took his tool, and unfortunately, at that very moment, a rock fell down in the area and killed him. No? So, I mean, what are the chances of those things happening? I mean, to have a rock falling down at that very moment. I mean, but yes, unfortunately, it is a series of breach of policies sometimes, and that those are the things that we need to remind our people that protocols and safety measures are for a reason. No? But it's education, and that will never finish. I mean, we'll keep educating our miners as much as possible.
Hmm. Have the deaths that over the last 2 years, the two of them that occurred, have that has that brought significant regulatory exposure or other kind of undesirable legal outcomes?
In both cases, it was a clear breach of conduct, and when the authorities came and review the situation, they released the company from any. But that's not, I think, the most important thing, Antonio, is his family. No, I mean, we we all suffer when something like this happen. No, the company as a whole, I can tell you that it's depressing for each and every one of us. No, we have more than 3,000 employees, and we all feel very, very bad and very down when those things happen. And
Mhm.
we always stand for their families, uh, and we personally go
Yeah.
to
Yeah, again, a super unfortunate situation, something that you can avoid entirely, but it's important to talk about, in my opinion. So that's really where I'm coming from. I do want to move on and maybe look a little bit forward towards the catalyst calendar that you have coming up, like sort of the next couple of news releases over the next couple of months. What do you foresee being able to release to market?
right. Well, we have a few things coming now. We have, of course, the commercial production from the flash cell circuits at Zimapan. That's a very important milestone. It sounds like a simple process or simple system, but it's just to give you a dimension of things. It's like a four-story building, and uh, and those circuits are working properly. So that's something that we might be announcing. We, of course, we will announce our Q4 and year-end financial statements now in March. Uh, we will announce we have a new mine at the Caballo Blanco group of mines coming into production. It's already in production. We want to make sure that it's already in commercial production. So we're giving a few weeks time. Already been 1 month. We want to give a little bit more time. That mine will add to the production of Caballo Blanco. We might getting that out as well. And mm, I guess technically speaking, I mean, the regular production news release and followed by the financial statements. And I guess those are the news that I see imminent in the coming weeks.
Yeah. Good. When do you think it's going to be a good time for you and I to have a catch up call and kind of follow up on what we've discussed here?
It'll be great, Antonio, if we catch up once we get our Q4 financials out, and we'll have more to describe and to go into each and every mine, which what each and every mine is adding
Mm-hmm.
into our balance sheet or to our P&L. So I think that'll be a good time, Antonio.
And I'll be looking forward to that, Arturo. What is just kind of wrapping it up here? What's been the biggest criticism that you've received from investors or whoever you've spoken to recently about Santa Cruz?
Well, I guess one of the biggest has been the implementation of a share buyback program. I have I mean, we're building a lot of cash, strong treasury, and I think that's something that we have in in our pocket we just wanted to do it in the right time, in the right moment, and graduating the company to the big board, to the TSX, will be something that we'll be announcing as well shortly. Sorry, that's another another news release in the making as we speak. Once we get there, we'll put in place a share buyback program, which has been something that the investment community has been wondering or asking for. We believe is the right thing to do, and but we'll do it in the appropriate time. No, definitely, I think that will be before summer.
Mm-hmm.
But I think uh, a share buyback program is something that we want to put in place, and one that we have been questioned by from the investment community. So we're going to first graduate the company to the big board in Canada and to the full TSX. And at that time, we'll be in a position to announce and to bring a buyback program in place.
Mm-hmm. Yeah. And that'll be a good point to talk about that as well. Buyback programs are interesting. They can work. They're not as easy to implement as it might sound. So that would be a good point to talk about it. What's your biggest criticism of me, Arturo? What am I forgetting to ask you here? What did you come here hoping to talk about that I failed to bring up?
No, Antonio, I think, I mean, generally speaking, we covered, I mean, what's the profile of the company? I mean, this is a company that will keep growing. We're not paying dividends in the short term. But as you point out in the beginning of the interview, you asked me about that, about what's the profile of the company, if we were willing to be taking over or to keep building it. My response was to keep building it, and since we're going to keep growing and building the company, I think we're not in the right moment to start paying dividends. I think that the increase of the share price, if we keep delivering properly and the revaluation of the company, will be better than a dividend for our investors.
Mm-hmm.
So I think, I mean, this has been a very nice barbecue. Maybe Something for me to correct as well is that my meat is midterm, medium well, medium rare, better.
Medium rare would be better. That
Will
is
be
exactly what
better.
I'll be looking for. No, Artur, it's been a good introduction to the company. I'm sure people listening, they know what I'm missing and they know what I'm forgetting in terms of questions. I'm sure there's going to be a bunch of it. For the ones listening or watching, please let me know what I'm forgetting. Put it in the comments and I'll ask Arturo in our next conversation. But for now, yeah, I think I've been through the majority of it. I know I've taken quite a big portion of your day already. So thank you so much for sitting down with me and giving me this time of your day.
No, it's my pleasure, Antonio. Thanks for having me here in the barbecue.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. So unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special or consequential or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."